So what we'll do is we are going to start out with a few words from our host and Grace.
Good morning, everyone. We're so excited to have you all online today. Thank you for joining us. As Scott Michael mentioned, this is our second session rolling out our compliance manual, and we're very, very excited to finally be at the stage where we can share it with all of you. It's represented, over a year and a half, probably closer to 2 years worth of work and collaboration from our staff, as well as the wonderful staff at Costello. So we're very excited for y'all to learn more about it. And as already mentioned, please add your questions to the question box. And again, for any questions that we don't get to today, we will be posting questions and answers to our website. We'll be doing that for the first session as well as this, so that if different questions were asked, everyone gets access to the same questions and answers. We'll also be posting any questions we receive through our public input process, which is open year-round. And we've already gotten a question of when the questions and answers will be posted. We will likely post them in phases, just simply based on the volume of questions we have been getting. So we will certainly have at least some published. It's the last day of February, so in March. But we'll get on kind of a rolling schedule so that we're not waiting to post all questions and answers until we have every single one covered. We'll kind of phase that out, but you can definitely expect to start to see those popping up on the website, and we'll announce them in our bi-weekly compliance newsletter blasts as well. So I won't take up any more time, but again, we're just happy to have you all here and excited for you to start using the manual.
Very good, excellent. And I like that point, using the manual, because it's been designed to be used. And we're going to talk about some of those features here as we go. So we're looking very, very much forward to discussion. My name is Scott Michael Dunn. I'm the CEO of a consulting firm. We're out of Sioux Falls, South Dakota, but we serve clients all across the nation. Okay, so here's a behind the scenes. Last week, I actually did do our rollout from a hotel in California because we got stuck there because of blizzards here in the Midwest. But I am finally back to the studio, and so this is what's going on around me. I don't just live in a gray box. There's lots of good things going on around me here in the studio, and lovely help from our engineer here as well. Now, I also am an executive with a property management company. So because I'm terrified of ever being bored, I guess, I spend a good deal of my time when I'm not wearing this hat I'm wearing here today as a trainer. I am a executive. And so I realize I was a consultant for many years, and it was easy to just say, well, just do one more thing, do one more form, just do more. And I now realize, as having my hands back in the work, that that all has a cost, and we have to have a cost-benefit analysis of everything we do, especially in the current era of staffing issues and inflation. And so it's very, very important for us to do the important things for compliance, but make sure we have a balance there. So I bring that to the table, and through the entire development of this manual, that was one of the themes that we talked about with the agency. All right, so that's a little bit about me. You saw that our friends from the agency will also at any time be willing to come up to add any clarification to my comments, to talk, bring up any points or answer any questions as we go. I'd like to know a little bit more about our audience here. So I like to always start with our poll. So let's talk about what your role in the industry is. And there'll be a button, and you can pick more than one. All right, so are you a property manager, regional or compliance manager, owner or investor, consultant, accounting, attorneys, compliance, state agency? I don't know, this team might be even quicker than last week's. I think we'll have to have a little competition going here between our groups. We're already at 77%. We'd like to get close to 90. Engineers and others can't vote, so we never get to 100, but All right, we're at 81%. All right, I am going to give you 10 more seconds. We had 85%. Can we tip 90? That is my challenge to you. Find the button. All right, 86%. And here is the mix here in the room. 23% are property managers doing that really important work on the ground. 57% of us are regional or staff or compliance managers. That doesn't surprise us since this is obviously a compliance related topic. 5% welcome, owner investors. 22% consultants helping others to make sure that they stay in compliance. And 3% are our state agency friends, which includes DCA staff, and there's other state agencies popping in as well. All right, very good. Nice to know who's on board here. Now, let's just ask another important question that might affect some of the answers to the questions asked. What programs do you have at your properties? I'll have you pick this. And again, you can pick more than one because these are like potato chips, these programs. We can never stop at just one. All right, tax credit, HUD, which is PBRA 811, public housing, etc. RD, home, tax exempt bonds. I think now we've had a practice run. You guys are real quick to find the button now. Excellent. And we've already surpassed the number or the percentage that voted last time. 10 more seconds, which is, wow, so much quicker than last time. Very good. And we got to 90%. Wonderful. All right, so here's in the room. Not surprisingly, 98% of you have tax credits. 69% have some form of HUD financing, 25% have rural development, 71% have home national housing trust fund, and 36% have tax exempt bonds. So some of the topics we'll discuss might slightly be affected by that mix. So excellent. Thank you very much for that feedback. It's always good to know who is in this big virtual room with us. All right, so our topic today, there we go, brand new, introducing the Tax Credit Home Compliance Manual from DCA GHFA. All right, exciting news. Now, this is not the only thing coming out in this partnership between DCA and Costello Compliance. There's actually a series of technical guides. Many of them addenda to the QAP this year, all nicely branded and matching, so it's very clear they're part of a set. And you'll notice that you see there on your screen some of the other topics. And I think there's even one more we're working on. We're getting close. We got the last two formatting to be formatted. So these are all assisting at various levels, those of you that have tax credit and home properties. So look forward to that as other books, other manuals, technical guides are released. But for right now, the compliance manual for tax credit and home programs is our main discussion. That's the point we're rolling out for this session. Now, as we met, first of all, with the agency, and we go through a series of questions, a questionnaire, what are our goals with this manual? And what the agency wanted to do was wanted it to be user-friendly. You notice Grace's comment at the beginning, we hope you start using this manual, that it is beneficial to you, which is why we'll focus very heavily on the practical features that are built into this manual. But they also want it to be approachable. Not necessarily have a whole lot of Roman numerals and you know, endless references that are very hard to find your way around. And so to make it approachable, easy to read, understand, and to apply what's in the manual. Usable features, lots of examples. I said that they just wanted it full of practical examples of various different things. We'll talk about that in just a moment. They also, of course, wanted to cover Georgia-specific issues. So obviously, that's the benefit of a state manual, is it tells you their take on various compliance-related matters, where the federal program either doesn't have rules or is gray or allows for some discretion. Also, it was high on their list to simplify where possible, to make the procedures streamlined, to make them easier to work with. And we'll find out there are several things that I think are going to make life easier for many Georgia properties. The belief is that this is better for the agency, for the owner agents, and ultimately for the residents that we serve in Georgia that need decent, safe, and sanitary housing that they can afford. And trying to eliminate unnecessary paperwork or redundancy that isn't actually required for either federal or state reasons. This involved an extensive review of federal guidance, so that's obviously your foundation. Thousands of documents, well, hundreds, we'll say, of documents, thousands of pages reviewed in the process to establish the federal baseline, and then build from there on the state policy level. Another feature that was adjusted is that this manual leave some details to the website that are going to change. So fees and procedures and processes that are likely to change or be sensitive to the year they're implemented, for instance, are going to be referred to on the website and not in the manual. The goal is to make the manual as future-proof as possible. We'll find out later it's impossible to totally future-proof it, as this one will demonstrate with some changes coming up. But at the end of the day, trying to make the things in the manual, references outside the manual for things that might change, right? So to try to make a nice combination of a website with current procedural fee type information, for instance, and then the manual with the a little more everlasting sort of policy and procedure. Now, here's some interesting statistics. If you're interested, the book has 270 pages of, we call it compliancy goodness. It has 12 chapters, 129 examples. When you see that screen, that symbol on your screen, that indicates that it's an example. It's full of examples tracking this, hopefully, the policies to examples that are similar to the real world. 300 plus hours went into the production on Costello and the agency ends. A lot of time went into this careful process to produce the manual. 21 months, almost 2 years, and we're very glad we took the time. We think that the end result was well worth it for one great manual. So why can we say that? What are the features we think that will benefit? And it's the kind of thing that when I'm working in a state, I want to know, and I want to have the help from the state agency as a partner on how to successfully do our job and provide the housing that we have. So what are some of the features? Well, first of all, you'll notice right away that there is a table of contents, and that is hyperlinked. That is hyperlinked. So here is the manual cover. We have a quick introduction, the partners who wrote the manual, and then you got your table of contents. And let's say we want to know, for instance, about the minimum set aside and specifically the average income tax. That's really hot news right now. And so you go there, you click on it, and it will bring you to that part of the manual. So it makes it very quick and easy to hop where you need to go. In addition to the table of contents, so let's just kind of run through the table of contents in essence, or the chapters. So first of all, we have an introduction, talks about the big picture with both the home and the tax credit programs. Then we give a summary of each program, a little more detailed, some of the specifics you need to know on the program level. And then chapter 2 talks about compliance monitoring. So what are the procedures in place on federal level for both the tax credit and home programs? Then we start drilling down. So we've already talked about the project federal rules. Now we start drilling down to project requirements. What are the things specific to your project that you need to know in order to be successful? Now, we dive then into probably the 3 chapters that will be used the most. They're the longest, they have the most material, and by far the most examples, because it's where most of our compliance is made or broken at a site level, and that has to do with qualifying households. So we provide an overview of the process, talk about student roles in Chapter 4. Then we drill into periodic income in Chapter 5, and Chapter 6 deals with assets and the income from those assets. So these three are powerful tools to help us to get that job done at the site. And this represents a significant percentage of the book, and we believe it's probably where most site folks and compliance folks will spend a good deal of their time. Now, of course, once you're done with an initial cert, there's also an annual examination, and we do talk about recertification and then increases of income then in Chapter 7. So these 4 chapters really kind of the backbone of what we do at a site level. Then we get into some very specific topics: acquisition, rehab. Are you facing a resyndication? These chapters are chock full of information to help you prepare. In some ways, some of the more complete description that I've seen from a state agency on these matters. And so we are very proud there of Chapter 8. Chapter 9 deals with the consequences of noncompliance and how to correct it. There's guidance here, I think especially on the home side, that we haven't not seen mostly outside of federal home guidance, and that's kind of obscure and maybe sometimes hard to find. So we put it in there on how to fix certain issues when it comes to the home program. Also the tax credit program. Without restating IRS guidance, it provides references and everything you need to go to that 8823 guide, for instance, from the IRS, and to be successful. So Chapter 9 pairs nicely with the Chapter 2 that dealt with the compliance monitoring. So those two work together very well in terms of dealing with non-compliance. Chapter 10, fairly short, but it deals with sale, transfer, or disposition of properties and DCA policy related there. Chapter 11 talks about what happens after year 15 for compliance monitoring, and Chapter 12 talks about the inevitable combination. As we noticed there when we did the survey earlier, we had up to 71% other programs on our tax credit properties. Lots of combinations here, and so this gives a practical framework for actually maintaining compliance, not only with the tax credit and home programs, but also how you examine other programs and make them work together. Now then, there are some supplements. We have an index, a glossary, multiple programs guide, and a UPCS physical inspection checklist. So let's just demonstrate these just briefly. If you go to the back, you'll notice the index, and there's thousands of words indexed. Okay, for instance, there might be the gig economy, right? Uber, Lyft, but there's also Uber, Lyft, DoorDash, also found in the index to find where specific references are made to various different features. And that's just one example out of hundreds and hundreds of references here in the index. Then we have our glossary. Common terms. As you're reading through, we always defined it at the first time. Generally, it's mentioned in a chapter or referred to it in enough with enough description that you'll understand. But if you come across a term you're not familiar with, the glossary is very likely to have that. And then the multiple programs guide. And one of the features of this is that it gives you a generalized description of how different programs interact. You've probably heard you always take the most conservative rule when you're combining 2 programs. So that's one of the ways that programs interact, but there's at least 4 more. And if you just think you should always pick the most restrictive, it might actually leave you underprepared. So DCA wants you to be ready to effectively handle multiple programs. And so this page gives you a nice summary of the interactions with multiple programs, then a table of contents. Again, clickable. So we built that feature in here too. You click on a topic and it will tell you not only a quick review of the tax credit, HUD, multifamily, rural development, home, National Housing Trust Fund, and bond program requirements with a nice summary, but you should never take our word for it. And so there are hundreds of references to government documents at the bottom that tell you where to look to get the full understanding of those various different rules. This has been, Costello has this charts have been available for various different sources. This is the most up-to-date version and reformatted to fit the format of the book. And I think it gave it some user friendliness that we're excited about. So very nice, most recent up-to-date version of that. Finally, we have a UPCS physical conditions checklist from HUD that we've included to help in order to deal with physical inspection issues. So those are some features, kind of running a quick tour of what's in the manual in broad strokes. Now let's talk about some of the special features. So here's a summary, and then we'll drill into each one of these. The things that we have built into this manual that the agency had included are the newest updates. They want it to be educational in structure so that it's not just dry recitation of rules, but how they apply in the real world. They want it to be technically accurate. They wanted lots of charts that are helpful. Process assistance. We'll find out the agency does not feel they should do manager's job nor give even advice, but they can provide assistance in how the processes you use can get the end compliance results that are needed, federal as well as state. And then graphics throughout and how that supplements all of the above. All right, so we're gonna dive into each of these in turn. So let's talk first about newest updates. Now, things are constantly changing, especially the last few years in affordable housing. So it seems like it's almost impossible to keep up to date, but up to the months before this book was released, we have incorporated recent guidance. So some examples, the average income test. Right, we had literally gotten the book ready. We're ready for the final review, and the new regulation came out in October of 2021. All right, so okay, now we got to go back to the drawing board, read that reg, make sure that we've incorporated that into the book, and it does. It's up to the minute information on the average income test, including the new regulation from late 2022. Excuse me, I think it said 2021 earlier. It was 2022, so we're talking real recent. The manual includes information on the average income test minimum set aside and how that should be implemented. We'll get into a little more details on that later, but suffice it to say, up to the minute information is found in this manual. Now, another example would be the Violence Against Women Act. And actually, we just had news within weeks on how VAWA will be implementing, or how HUD will be implementing penalties for the Violence Against Women Act, which the manual points out will be the same as fair housing penalties. And HUD just rolled out their new website with VAWA. There people can file complaints. It goes through Fair Housing Equal Opportunity, same branch, to be investigated just like fair housing. So the manual gave fair warning that that was coming and talks about that when dealing with the Violence Against Women Act. Cutting edge information. Page 82 through 85 deals with the Violence Against Women Act. Also effective December 28th of 2022 is new carbon monoxide detector guidance. And the manual reflects that very recent government update that tells us that carbon monoxide detectors need to be installed for HUD programs. Now, the tax credit and home programs are not the type of HUD programs that are covered under this guidance, but vouchers are. And since the tax credit and home program cannot deny voucher holding residents or applicants, this will affect us. And so the manual helps point that out, realize that they need owner agents of tax credit and home properties need to be prepared to deal with the carbon monoxide detector issue. And as a matter of state policy, the cost cannot be passed on to residents. So all this goodness, plus some references to some HUD notices that give you real good education. What types of properties would need, or units would need, carbon monoxide detectors? Ones with open flame appliances or off of a garage helps you to really understand how exactly practically to apply it. So page 80, up to the minute information as of the very end of 2022. This is reflected here in the manual. Now, tenant selection guidance, and this is a little older, but we're finding that some owner agents miss the message from HUD, Fair Housing Equal Opportunity, that tells us about criminal background checks and things like not using blanket no felon policies and not using arrest records in our deliberations, all related to fair housing. So there's some guidance on that. In actually a couple places relating to criminal background checks. May seem repetitive, but it's a very, very important topic, and one of the fast facts, as well as another place, covers this. So that is more, in government terms, fairly recent in the last few years, but important for everyone to get the word out and understand this is an important fair housing matter, and the manual will help you be ready and prepared to deal with that. Also, just talking about recent updates, the IRS lately in audit has been examining an issue, and the audit technique guide, section 42 audit technique guide, they warned us that when you have an employee unit, that employee cannot serve more than one property. And there's even an example in the manual that actually deals with this issue. So you can't have a regional living in an employee unit. You can't have a manager working on 2 phases, different allocations, different projects, and live in an employee unit, unless you're also a tax credit tenant. So this example lays out, and the text that surrounds it gives you explanation to really help head off what we see to be a big audit issue with the IRS lately, where owners are putting employees in units that are serving more than just the property that they live in. So a warning, up to date, this is up to the minute information on what is being examined. Now, on top of being up to date and up to the minute, they wanted it to be, or the agency, one of their goals was to make it educational, not just in that it's good, solid information, but that the structure is designed to educate. Now, let me demonstrate what I mean. On page 23, we talk about the process, the steps of calculating tax credits. Now, some of you, we did have some consultants in the room, maybe CPAs that are actually doing people's tax returns, but most of us don't do that every day. Okay, but this manual does actually list the process for calculating tax credits for a layperson, and helps us to understand why what we do on a compliance level is so important. But it doesn't just stop with a quick set of steps here and a description of some accounting terms. But it goes on to define those terms. So the first one's eligible basis, for instance, but it doesn't just stop there. It gives an example of eligible basis with numbers. And then to just really nail it home, it nestles it all in some art that further educates on the 8609, where is eligible basis found? All right, so all of this works together in an appealing visual way to educate, to make it clear the important concepts that we need. So throughout the book. Now, when we get to charts and graphics, that's all sort of also builds on that concept. Now, another feature that was important to the agency was technical accuracy while still making it easy to read. All right, so we wanted it to be readable by individuals with a wide variety of educational backgrounds. We wanted to make it simple and clear, and yet we wanted to also make sure that it was technically accurate. Let's just use an example. You don't have to tell me, but have you ever referred to the extended use period as year 16 on? Have you ever heard that? Or year 15 on? Probably technically 16. Extended use period. I think if we all were honest, we would admit that we've called that the extended use period. However, on a matter that is not insignificant, the credit period is the first 10 years, right? Year 1 through 10. The compliance year period is year 1 through 15, and all of these have rules associated with them relating to compliance. The extended use period is year 1 through year 30. It's the entire period. And here's the reason this is technically important. There are several rules that say during the entire extended use period. You need to know that's not just the last 15 years plus, it's the entire time. And it leaves us underprepared. And honestly, I and the state all admits this is a term we've used to sometimes describe that after year 15 period of time. So you're in the end of the extended use period, but the extended use period is the whole time. So technical accuracy, and making that very clear through the graphics we demonstrate here on your screen really will help to make sure this is understood, some of these key important concepts, while still using language that is easy and not getting hung up on tiny little unimportant details. All right, now the next feature that we've actually had a lot of good feedback already is on the charts. I think that a chart sometimes really distills difficult concepts down into a process that's easy to understand or visually in a way that makes sense. So on page 31, for instance, you'll notice that there is a chart that talks about the key information we need to get off of our Form 8609. It's kind of the birth certificate of our tax credits, if you will. It lists the form number, line numbers, the item that you get at those line items, and why we need to know it, right? So detailed description there, somewhat detailed description. And to make it even just that much better, we give you a chapter to go to in the book that will give you more information on that particular line or chapters. All right, so very powerful chart, easy to understand, helps you get that key information you need, and so much comes from Form 8609. This just really gives you a nice summary of the key compliance concepts. Now on page, another concept that charts help us do is drill through a specific topic throughout the book. So let's take students as an example. There are several charts we needed. So on page 103, we have our flow chart for student eligibility for the tax credit program. Well, that means obviously we need a companion for the more complex home student rule. All right, and this is where the chart really helps because there's two definitions of independent students. There's just different rules to parse here. Okay, so we got the eligibility issues, but then as you keep reading, you'll realize that students have student financial assistance issues that might have to be addressed if a household's receiving Section 8 assistance. So on page 138, when we get to that section on income, we discuss student income, student financial assistance in a flow chart that again walks through a fairly complex set of steps and simplifies it for you there. So you'll notice the charts actually throughout the book can help to take complex or multi-step processes and make them understandable. Something I'm very proud of with this book, for the first time we've actually released a chart we developed dealing with trusts. All right, so a flow chart that has to do, lays out if your tenant is the creator of a trust or the beneficiary of a trust, if it's revocable or non-revocable. Getting the trust agreement and defining those things will help you then to follow this chart and accurately determine the income and asset value for a trust that a household might have access to. So page 145, you'll find that there when dealing with assets and trusts. Now, we mentioned that the charts often simplify complex rules. One of the more complex rules in all of affordable housing is when income increases at a home property. Whether you're fixed or floating home, whether the unit was low or high home, all affects the answer. So we've created a very approachable, easy to understand, nice soft edges, no sharp edges here. It's easy to read the process that you follow depending on all those factors. Page 173 gives you a nice chart that helps you to understand that. Again, all of these tools helping propel you forward and getting the compliance right at a home property in this case. All right, now the next point, and DCA GHFA went out of their way to make it very clear that they were not going to provide advice, legal advice, not going to tell you how to do your job as a management agent. that those things are what you do well, and we're going to let you do that. However, we do need to tell you how to get to the compliance results that are needed from a federal and state standpoint. So we'll provide some process assistance, and I'll demonstrate what I mean here. When you're setting up a property, for instance, page 32, you'll notice there's a really nice chart, items to highlight, on your tax credit LIRC or your home LURA. And it gives literal section numbers that you can go to, what you need, why you need it, and then the home LURA as well. All right, so helpful information there to help you get your property set up. Beyond that, there's lots of things you'll do like you do so well as management agents. Now, the next thing is what federal forms do you need, for instance, with the Violence Against Women Act? So again, this was introduced with this manual for the first time, and I'm excited to talk about the VAWA forms, right? So you've got the purpose of the forms. Some of them are tenant notification and certification, emergency transfers and leasing, the forms that meet those, and then what action you're supposed to take. Some are adopted as is. Some you're not supposed to alter at all. You take what HUD gave us and you use it. Others need to be adapted, all right? And then how do we handle for tax credits versus home? All of that is laid out very nicely in this infographic that helps us in our process. What forms do we need in order to successfully manage the Violence Against Women Act requirements found that we're now so liable for in terms of financial penalties? So helpful process assistance available there in the manual. Now, tenant selection then is another thing you might think through. How am I going to set things up? So we've looked at where we get information from our LURAs, where we get form information using VAWA as an example. Now, how about tenant selection guidance? We have a section based on HUD multifamily guidance in the HUD handbook, but adapted for purposes of the tax credit home program, and even further guidance from HUD CPD that deals with home issues. So giving you guidance on how to set up your tenant selection policy in such a way that will meet federal requirements. So helpful hints and information there. And those are found starting on page 92 of the manual to help with the process of adequately selecting tenants for tax credit and home properties. Now, you also, as you're looking at setting up a property or a specific compliance operation, probably want to know how we should set up files. Page 159 through 60 gives you an anatomy of good household files. It lists the required forms, the suggested forms, and DCA has very few, if any, required forms, but there are certain things that are going to require to be in that file, and this checklist lays that out very nicely. So again, a process. These are the things, and you'll have other things because those are good management company things to have in a file, but this focuses on that compliance to make sure that you're successful there. So that's another tool that helps when giving solid, based on federal guidance and state policy, process assistance. Another thing that's mentioned, and tax code mentions timelines many times, very short. Actually, section 42 is not that many pages, and it mentions many times day, date, hour, time type references. So the manual gives some process assistance with timelines. For instance, utility allowances. If you're using utility allowances from your local public housing authority, it talks about the 90-day deadline before you can implement, or in which time you must get it implemented. If you're not using that, it talks about it. There's two time frames. There's 60 days. You have to use rates that are no older than 60 days. Do an analysis and then give a 90-day period before you implement the new utility allowances. And this is an area where we've seen a lot of non-compliance. So this also gives us dates so that we understand the concepts, right? So we give you dates to understand how the different type of utility allowance timelines. And a lot of owners just felt like they could just change the utility allowances and give a notice to the tenants with 30 days notice or whatever, and haven't really carefully gotten their head around the utility allowance rules. So not only is it described in text, but a nice chart to really help with those timelines. Again, a process assistance. And then there are several worksheets, or a few worksheets, we'll say, and one particular one has to do with when you have a home property without tax credits, and the household goes over the high home income limit. They could become over income for any home unit. We then have to calculate rent based on income. Now, if you're a HUD or rural development manager or have properties, you do this all the time, but a lot of home property managers have never done rent based on adjusted income. And so we have a worksheet that really helps walk you through that, fill in the blanks, and it will get you the answer you need. So helpful process help there in the form of a worksheet, because it's fairly complex. There's several steps, and this actually takes, it starts on page 176. I think it takes a couple pages. So to help walk you through that process, for those of you that have home funds without tax credits, when you have a household go over income, you may well have to do rent based on adjusted income. This prepares you for that scenario. All right, so we've talked about the newest updates, the educational structure, the technical accuracy, the charts and process assistance. Our last point and the last useful feature is, you'll notice the graphics. Right from the first page of the text, you'll notice that it is attractive. Man, look at that splash property, that beautiful property right there on the introduction. Let you know this is going to be easy to look at, and it's going to draw us in. But it's more than just pretty. As we've mentioned, these features are designed to actually complement the educational nature of the manual. So on page 111, for instance, I'm going to talk about timelines again. The lifespan of a verification for the tax credit program using the recent HUD guidance. So we have our 120 days. The thing, once we receive it, can't be any older than that. Then it has to be used within our 120 days. This graphic very nicely helps us to understand. But wait, there's more, because home actually has a 6-month standard. And so this actually will help us to see how that coordinates with the tax credit rule. So again, graphics that really help us to understand. It provides learning aids to topics covered. So it gives a framework in your head. For instance, you see the steps to success. This is the introduction to how to qualify households right there, found in chapter 4. And it lists all the steps you need to take on an application process. But then as you go through the manual, through those 3 chapters that deal with qualifying households, it walks you through each of these steps, and this art appears again to keep in our mind where we are. So you've read the overview here, you see on your screen, and then it'll highlight each of these 8 steps as we go through those chapters to make sure we understand where we're in the process. To visually explain, I would say for a new manager, for instance, this could be extremely helpful to keep track of where they are in the process as they're reading the manual. Now, another feature that's graphically assisted is combined programs, and especially because this is a home tax credit manual, we actually have several graphic callouts that we'll list throughout the book when there's interesting interactions between the programs. It lists a basic description of what the tax credit rules are, okay, what the home rules are over here on the right, and then in the middle, it's when they combine. How are we going to handle it? So this tax credit side might, for instance, explain the verification rules for tax credits for home. So if you have just a tax credit or just a home property, that's all you need. But the middle is how they're going to work together. And this graphic then really clearly pops out at you as you go through the book and tells you, okay, here's an area where there's an interesting interaction when I've got a combined tax credit and home property for those home units that are also tax credit units. All right, so very helpful there. And it starts, page 9 is the first example, and it goes throughout the book when applicable. Lots of practical examples. Page 16, of course, deals with the minimum set aside very early in the book. and it talks about when you have a multi-bin project or when you have a single bin project. And if you don't know what a bin is, you should read the book. We'll give you nice clarity on that as well. It's building, of course. Also, there's an example on how long you need to keep those first year records, but we didn't just stop there. We combined that example with a graphic. So again, that 1-2 punch, a good example plus describing it graphically to help you understand how long you need to keep first year records plus how long you have to keep records for years 2 and 3. Federally speaking, and then there's another one for the home program. So really to help you to make sure you walk away with the information you need in terms of how long you need to keep those records. Another feature, and this is unique to the DCA GHFA manual, is fast facts. Nice Georgia branding, and these tell you things, for instance, often found in very obscure federal guidance or help amplify things that are not in federal guidance that need to be understood though. For instance, if you read in the very fine print on a explanation on an IRS regulation, the IRS tells us that if you're using public housing authority utility allowances, remember once they change, you only have 90 days to implement them. You need to be asking every 60 days. So this fast fact helps you understand that if you're using your public housing authority numbers, make sure you're asking your PHA, because if it changed the day after you asked last time and you check 60 days later, you still have your 30 days to then implement the utility allowance. Now, additionally, as I mentioned, sometimes there's gaps in federal guidance. For instance, HUD constantly refers to periodic versus sporadic income, but doesn't define them. So the manual, the DCA has a fast fact that defines periodic versus sporadic in a way that makes it easy to understand. And page 118 lays that out. All right, so those are some of the features that we've designed, built into the manual to make it easy to use, understandable, educational. Hand it to a new manager. It will actually be very, very helpful in getting them along that road that they need to go down. I'm going to check our questions. Can we see? The first one, and some of these I'm going to wait because I think we'll get to them later, but I will answer this one. For home properties, can the work number be used to verify income instead of pay stubs? And the answer to that is yes, because, and this is laid out in the DCA manual, and we'll get to this. I think I'll give you a reference for this later. But basically, the home program requires that all home units have 2 months worth of wage history. They don't require verification of employment at all, but they need the wage history in order to calculate your income, which means pay stubs or the work number are going to be your sources of, and that's of information. That's non-negotiable for a home unit. You have to have that VOE is optional. Very good question. For transfers between buildings that are not part of the same project, does the move-in date change or does it stay the same? The move-in date will change because you literally will treat it like a move out from the one project and a move into the new project, and they'll have to qualify as a brand new move-in and they'll get a new move-in date to that project. So excellent question, I appreciate that. All right, some of these questions I see will be coming up. Yes, got several questions that will be coming. I think I can handle this one. When the earliest pay stub is stamped with the received date, does the check date still need to be within 120 days of the effective date? Yes, it's clarified in the manual. The most recent pay stub date needs to be within the 120 days. So you need to get 2 months worth of stubs, and the most recent has to be within 120 days of the effective date of the cert. So that's sort of a little different. A lot of them hinge on when received. In this case, that's a very specific date. Needs to be within the effective date. Very good, excellent. We will get back to more questions after our next main topic. Now this main topic is going to be new policies. So what's in this book that might be different, that's changed now with the manual? first of all, we mentioned the average income test. And so it restates in many ways what's in the federal guidance. I'm actually doing a webinar this afternoon on the AIT, so this is on my mind. The average income test is found throughout the manual. One of the reasons that when the new reg came out, we had to totally revise several chapters or portions of chapters, but we discuss on pages 16 through 20, the bulk of the discussion on AIT, average income test, happens. We give you a nice graphic here that demonstrates off your 8609 where we find the minimum set aside, one of them, of course, being the average income minimum set aside. We talk about the policies that the state has, and a couple of important ones is that redesignation for unit because in the AIT program, average income test, you can have 20 to 80% designations labeled on units, and then of course you move in tenants that meet those designations, and those designations can be changed to meet other program requirements. That's not part of the federal guidance, but it's allowed under the federal guidance. The state's allowed to come up with their own reasons for redesignation, and the DCA GHFA manual makes it very clear that you are allowed for home increases of income purposes. For instance, units might have to be redesignated. Section 8 income targeting reasons, right? There's all kinds of reasons. You might have other programs, and if those other programs require redesignation of units, DCA does not object to redesignating for those reasons, as well as the other ones that are in the federal rules, like the Violence Against Women Act emergency transfers or reasonable accommodation transfer requests. All of those are acceptable and laid out nicely in the manual. So that high to low home increases of rent for home is an example where you might have to redesignate units to satisfy the home program, and the average income test is fine with it in Georgia. Also, DCA GHFA signals their willingness to work with retroactive certs. The IRS guidance allows the owner as much leeway for the federal reasons that redesignation's allowed as they want. But then after you end up that taxable year, to go back and change because you find a problem later, which is when we usually find compliance issues, then that is something DCA is willing to examine. You have to do it with 180 days, and DCA will look at timeliness in terms of an owner's response favorably if they take it seriously in their deliberation, but they signal their willingness to allow those retroactive redesignations, which is very important for our investors. They'll probably want to see that in terms of making sure that they're comfortable with implementing the average income test at our properties. Now, another new policy relates to our vacant units. So in the past, there was no guidance in terms of how long, even though the tax code said the states determine what a reasonable period of time is to turn vacant units. And Georgia Housing has said that after 30 days now in the new manual on page 87. So after 30 days, they may question, is it being turned? Because there's nothing wrong with having a vacancy. You might even have it for years if you have no choice, but you have to be marketing it and you have to be making them rent ready in a reasonable period of time if you want to claim tax credits. So 30 days is a reasonable period of time in Georgia. That after that, they might question. It's not going to mean there's a loss of credits unless you haven't turned them in a reasonable period of time and are marketing those. So that's stated for the first time in the manual, page 87. Now, another new policy has to do with unborn children and student status. This is not clarified anywhere in federal guidance, although the IRS has spoken to this verbally, it's never been put in writing. And so DCA, after evaluating all of the issues involved on page 97, makes it clear that unborn children are counted as non-students for purposes of the student roll. Okay, so pregnant person, let's say a pregnant woman and her unborn child, the unborn child's a non-student, they're not a full-time student household. There's other implications you have to think through, but DCA has taken the stand as stated here in their manual, page 97 there. All right. Now, those are new, kind of out of, they're not been addressed anywhere else. There are other things that have just changed. So before, third-party verifications were only forms completed by a third party and never delivered through the applicant resident's hands. And that was HUD's definition for decades. And then 10 years ago now, change 4 of the HUD handbook came out and changed third-party verifications to be anything prepared by a third party, even if it comes through the tenant's hands, thus check stubs. And when HUD changed its policy, the IRS published a newsletter and said they were perfectly fine with that as well. So in fact, the regulation, the underlying regulation from the IRS says we would verify using things like W-2s or pay stubs. So they mentioned documentation right there in the regulation. So page 108 through 109 kind of lays out the hierarchy, the preferred methods. Now you can pick among any of these. They're not, again, telling you how to do your job. And different reasons, and different investors have kind of different priorities on what verifications they want. But here's what DCA sort of prefers, and it starts with documentation. Okay, so brought in by the household. For instance, 2 months of recent consecutive pay stubs. And this is non-optional for home. That's baked right into the new home regulation from 2013. You need 2 months of wage history. The VOE, verification of employment, is optional, but you need the wage history in order to calculate income for the home program, okay? So there's no choice there, but your other units, you have, among other choices, of course, an employment of verification is an option, and the work number. Now, this is an order of preference, but there's no requirement that you follow this order, like try to get one, and then try to get the other, and try to get the other, as long as you have a consistent policy. This just expresses the preference that the agency has, but it's not straitjacketing you to any specific requirements, because your investors and your compliance officer may have different ideas on how exactly to implement verification. Okay, but if you're using pay stubs, you use 2 months worth, cover a specific time frame, and that will meet the DCA requirements. And then of course, unearned income and asset income, also similar requirements, or sort of order of preference that might be used. However, you might think, well, a verification form actually just gets an answer from the bank without having to get 6 months worth of statements. So I would understand where checking you might want to do the verification form instead. So they're not forcing a specific process, but they are suggesting an order and documentation generally being preferred. Home is always called the source documents and has always preferred it. So it's kind of reconciling our programs, making sure that we get the best possible combination. Now, before, home required a full certification every year. Okay, page 161 through 162 clarifies that actually the federal requirement requires a full cert every 6th year of the affordability period, okay, for the project. And so self-certification is acceptable for other years from a household. And we then, if they self-declare their over income, and you're in a place where you have to calculate rent based on adjusted income, then we're going to be more precise and get further source document verification. That's all laid out nicely in the manual, along with an example. So it helps you to understand, and it gives you an example of 2 people, Damien and John, and when they move in, they're full certified, and when the recerts would be self-certification for those households, depending on the year of the affordability period. All right. We have gotten some questions on the year of the affordability period, because there's a couple of different ways to look at that. We're going to assume for now, and then clarify this in writing, that the year in IDS, your first year of your affordability period starts. Certain things happen. It's not placing in service. There's other things on the home front that makes this the first year of your affordability period. That date, that year is year 1, and then year 2, and so forth. We'll clarify that further in writing. That is one of the questions we received both today and last week. So we will make sure that gets clarified. But yes, every 6th year, everyone that's living there that's recertified that year will have to be certified with full source document verification. Other years you can self-certify. Now, if we can keep track of that, and you have software or other processes that will help you keep track of this, is a significant decrease in labor costs. Significantly less work involved in getting one self-cert than in going through the entire verification process. It does mean that an owner would have to invest a little bit in making sure they have a good system to keep track of it, but it is could well be worth it. And the agency did not want to take away this federal option. It's up to the owner to decide if they can manage it to keep in compliance. Now let's go to our next poll. It's a quick survey. Give me a true or false on this one. Okay. Section 42 requires counting the highest in a range of hours and year-to-date calculations for employment. Give me a true or false on this. And no one will say what anyone said, so just give us your opinion. All right. In light of time, I don't want to go too long on this. Got 77%. Can we get to 80? Let's go 10 seconds here. And we go 79. Oh my goodness, we're just flirting with it. Okay, there you go. Got 82% of you found the button, and 63% feel this is true. 37% feel it is false. And it's going to be very important to address this issue. If you go to both the statute and the regulations, you might be surprised. Before, the guidance from DCA generally was that we would have to use year-to-date and other calculations. And if at any point they didn't qualify, any one calculation put them over, probably treat them as over. And if there was a range of hours, 35 to 40, for instance, you use 40 hours, okay? Both of these reflected that general belief that Section 42 says we have to do things this way. Page 119 through 120, though, helps to clarify. If you actually go to the statute and the regulations, what it says is tenant income is calculated in a manner consistent with the determination of annual income under Section 8. If you went to court, that's what you could defend legally. And Section 8 does not require an automatic calculation of year-to-date. That's past, they look to anticipating income. Might be part of the puzzle, but not an automatic determination, and they use averages. Now, DCA recognizes that these come to be believed to be true, and notice we said true. The majority of us here said that it's true that Section 42 says. No, Section 42 says you have to do it like Section 8 does. That's literally it, and that's all you could defend in court legally. And if DCA were ever in court, that's all they could defend legally. So how does Section 8 do things is the question. Now, we've developed in this industry some what we'll call more conservative methodologies that some professionals in the tax credit industry, mostly driven by investor worries, might call them conservative, but they're not in keeping with Section 8. And all DCA, GHFA is going to require is compliance with the regulation, with the tax code, which says we do it in a manner consistent with Section 8, and they do not add additional rules that would exclude otherwise qualified households. Have you ever noticed it seems like we're doing 4 different calculations trying to disqualify them? That's not the point. The point is a consistent policy similar to Section 8 that gets you good income determinations. Okay, so they point out that it doesn't forbid these methodologies, especially if your investors require it, for instance, but make sure they truly do, because most investors, once they see in writing what the state will do, are okay now, because they know that there's no risk. The state is not going to report this to the IRS as non-compliance. The IRS leaves this kind of thing into the state, and frankly, the IRS has said we calculate income in a manner consistent with Section 8. We're not going to get any trouble here. We just needed the state's blessing. And the state says that's okay. They do not forbid these methodologies, but they will not use them when determining when they audit your files. They're going to look at how Section 8 does things and not those more conservative methods. So you won't find get a non-compliance for using the average in a range, or for if there's another method that might have found them over income, as long as you're consistent in using an income in, or a determination consistent with Section 8. All right, page 124 deals with an example of average hours. And then 124 also goes on to deal with year-to-date. If an owner does choose it, notice that where an owner agent chooses to analyze year-to-date. And basically the point is that they give that's the problem. There's been never any guidance on how to do year-to-date from HUD because it's not a thing they do. If you have pay stubs, it's probably going to be part of your analysis a little bit, but what they don't want to see is that you automatically disqualify someone. Year-to-date could be high because they were doing their boss's job for a few months, but that has changed. They've gone back to their normal routine, and anticipated income might be different, and year-to-date may be not as accurate. So coming up with an accurate determination, not automatically like many tax credit managers have done in the past, just excluded them if any one calculation put them over. Coming up with a reasonable standard, if you use year-to-date at all, which isn't required. All right. Now, before there was no utility allowance change policy. Now, page 49, it's part of a process called a project concept change process, and there's instructions for how to implement that in the new manual on page 49. All right. Let's ask one last survey question. We're getting close to the end here. Let's see here. I have or do not have properties where all units are tax credit. In other words, do you have 100% tax credit projects? And if you have even one project that's like that, you should say yes, you do have at least one. All right. Nice participation again. I'm going to give you 10 more seconds. All right, with 75% of the vote in, 73% of you do have projects that are all tax credit, and 27% do not. Your properties have non-tax credit units on them, apparently. Well, for the majority of you, this is going to be pretty big news. All right, in the past, under the old guidance, a full certification was required annually for all projects that were not 100% tax credit. 100% meant tax credit only and all units to get a waiver, right? So only tax credit only and all units for tax credit. Okay, which is actually much more stringent than the federal requirement, which is just that all units are tax credit. They didn't care if you had other programs. The IRS doesn't care. And so DCA has now adjusted the policy. They don't require income research at 100% projects, just self-cert right away, starting with the first recert. And the definition is if you have all tax credit units. You could have home, you could have Section 8, and you'll have to do research for those other programs, but it won't be monitored for tax credit compliance because only the federal government only requires student status be gathered every year. Okay, so this is found on page 161 that talks about this for projects that are completely tax credit, even if they have other programs. Each unit must be recertified annually using a self-certification form. Now, there is a process that you'll use to get to take advantage of this exemption, and that will be found on the website. And I don't know, I'm not sure it's there yet, but it's coming. Okay, but there will be explanation there. That's again one of those procedures that may change and is not specifically laid out in the manual, but it will be. So we've had some questions on that today. Keep watching the manual. The website is where that policy, if it's not already there, will be. All right, so that makes now, again, considering our labor environment and costs and inflation, this is a significant savings in time for those tax properties that are 100% tax credit. Now, if you have home units, those will have to be self-certified every except for every 6 year of the affordability period. You put on the layers of different programs, but it's significant decrease in the time needed to manage those properties, okay? Student status, though, still always needs to be federally examined every year. So just to make sure that we're very clear on that. Now, in the past, home requires 2 months worth of pay stubs, but the HUD multifamily guidance says we get 4 to 6 pay stubs. Now, right away, you recognize that's a problem because that could be 4 to 6 weeks or 4 to 6 months, depending how often someone's paid, and treats people differently and unfairly, perhaps. So evaluating all the factors, and the verification process is almost entirely left up to state agencies beyond some very basic suggestions from the IRS. The decision was made and is codified on page 108 of the manual to require 2 months worth of wage history. And if you're using pay stubs, getting back to the question we had earlier, the most recent has to be within the end date, has to be within 120 days of the certification. But again, if you're dealing with, well, we'll just leave it at that. The most recent has to be within 120 days. You may choose to do more recent, but as a move-in delays, for instance, or construction delays on new construction, this gives us a little more time perhaps to still have good paperwork while in the process. All right. Now, prior benefit letters for fixed income sources like Social Security had to be within 120 days. The new manual on page 111 makes it clear that the benefit letter, for instance, the Social Security letter that they get after the COLA is announced in late October or November of a year, covers the entire next year, and that would be acceptable. That's good for Social Security. Fixed income sources that only change once a year with COLA doesn't apply to SSI because that tends to change throughout a year, and so then that SSI verification would have to be within 120 days. But COLA-based benefits, sometimes retirement accounts only change once a year, annuities, that sort of thing, based on a COLA, and that would be the most recent benefit letter covering the year that you're dealing with. So that's found on page 111 of your manual, and again helps to reduce the burden while maintaining the integrity of your verification process. Before, there was nothing in writing on what's allowable for fees, and the new manual on page 69 through 70 has a real nice visually appealing chart that lists federal, but also some state policy, some decisions that the state made in terms of certain fees that are either yes, allowed with some details on application fees, for instance, that it can only be based on your average out-of-pocket costs. Can't charge fees though to verify things, some more details on there. Unit transfer fees, this is a state policy decision, are acceptable as long as they're not to cover the costs of making the unit ready. That's part of, according to the IRS, the owner's responsibility, but there might be other costs incurred with transfers that are allowed. Month-long tenancy fees, not allowed. The IRS says those are non-optional, and DCA further says that they're not allowed. So chart there that gives you a nice guide to allowed and not allowed fees. Now, before there was no clear guidance on resyndication. I mentioned I was particularly proud of this chapter. I think it's chapter 8 that deals with resyndication. Pages 84 through 87 now deal, for the first time, we have extended use periods that overlap with resyndications where you go and get more credits, and sometimes they don't overlap. What's the difference and how will that affect us? Grandfathering households in and how that works, and the preferred paperwork together. Because there's been this sort of thing that, oh, if I do a cert now for all these households at a resyndication, that it's a better, cleaner file, but we're finding that's not always true. And DCA suggests that if you go back to the original file and it's perfectly fine, why disrupt the household further? their first preference will be to look at the original paperwork that they moved in under if you're going to grandfather a household in resyndication, and then move on to certifying them now if the paperwork isn't solid, and if some research since then didn't establish their eligibility at that point. Okay, so DCA has observed this is less disruptive to households, allows the original paperwork to move on more quickly, and so this is an option that they're making available. Again, your investors can read that, see what the state is comfortable with, and make a decision on how much of a burden, labor and time burden they want to put on a resyndication lease up. All right, I'm going to check the questions, and again, we will respond to any we can't because of time here, but let's see. Can you touch on on-site manager non-revenue unit? Non-revenue unit is a rural development term, so it's not, yes, it is a rural development property. The manager manages 2 tax credit properties. One is straight tax credit, the other is combined RD and tax credit, wherein she lives on site. Okay, RD would allow that. She can live in a non-revenue unit. However, it couldn't be a tax credit exempt unit. They would have to qualify as a tax credit unit because she's working for more than one property. So she would not qualify for a tax credit exempt unit. It would have to be a tax credit unit, and she'd have to qualify when she moves in. Very good question. Will this webinar be posted on DCA's website? Yes, more to come on that. But yes, it will be this or the last one with the same basic information, and then the questions will be published separately. Are tax credit sites required to use 2 months worth of paycheck stubs? If you use paycheck stubs, yes, at least 2 months. You could use verification of employment, but if you have home units, you're going to have to use the pay stubs, which really brings us all kind of to the point where in many cases we might get to the point where we're just using pay stubs for both programs, but that's up to you. For home properties, does DCA provide a 6-year schedule? No, that's not a responsibility to determine every 6 years and to make sure they maintain their process. How do we request a self-certification process approval? Again, that will be on the DCA website. Are we allowed to have the screenshots from the webinar today? You'll have the video, so I think that answers that question. Let's see. Okay, I'm just seeing here. For self-certification, are assets still verified? No, everything's verified with self-certification. The tax credit program actually says that if you're 100% project, you don't have to do income recert at all. The self-cert is just a form DCA has put into place. Home still needs to be certified every year, but self-cert is how you verify it. Is basically what it comes down to for everything but every 6 year of the affordability period. Okay. Would VA benefits count as a Social Security COLA type? Generally, yes. VA benefits, if they're changed once a year with a COLA, which generally is how many VA benefits. You may know more about that. SSI stands out on the Social Security front as one that would change often. So if it's going to be a benefit that's going to change during the year, generally you would verify that within 120 days. Everything else would be a more recent benefit letter. All right. Let's see. We have another question every 6th year. We'll clarify that in writing. We've had others that clarify that, and we'll want to get some precise language on the every 6-year rule. All right, very good. Can you self-cert income assets for 100% tax credit only without agency approval? There's still a process to, in essence, get approved. Okay. slightly changing the language on it. They want you to benefit from the exemption, but there is a process to make sure that you qualify for it. All right, and compliance and some other things will be a factor there. Just a few little notes, and then I think we'll invite our state hosts to come up again here, but a few notes. What's going to come up in the future? Well, this is the last of 2 rollout webinars, so we've had really nice, over 400 people attending altogether. We certainly enjoyed this discussion, and we will definitely have one of the recordings posted on a place of DCA's choosing. I think it might be their YouTube channel, but that will be up to them. In 6 months from the original release, then we'll release a final, and that final will not have any new policy decisions, nor even clarification. It will just simply have any identified minor text adjustments, typos, spelling, anything like that that's discovered. That will be all adjusted at the 6-month mark to be the final version of this manual. No policy. Now, they're going to take into consideration any policy comments you do send in for a future revision, but this one won't be about that. That's just a final. If you have any typos or any other issues, that will come out. So we're anticipating that in July or August to release that. But don't be looking for any. I mean, what you have now is the bulk, is the policy. There just might be minor adjustments. I think a few pieces of art are going to be adjusted slightly as well, just to make it clearer. Not the policy content. However, as much as we tried to make this totally future-proof, of course, since the release of the manual, we've had 2 big things happening. And so in 2024, at some point, you can look forward to the new revised manual with new policy adjustments, and they will be continuously updating it as needed, as federal guidance changes or as state policy or your suggestions are taken into consideration. So sometimes in 2024, they'll take your considerations and suggestions into consideration and are going to release adjusted manual. But what you got now is going to be the bulk of what you get. The changes that come federally that we're about to list will probably have to be part of that revision. So you might have heard that Inspire is replacing UPCS. We have a whole chart on UPCS and pages on how to use UPCS. It's a slight change in sort of how you look at things and how the protocol works, but much of that guidance is still helpful, but in October of 2023, but we're still waiting for guidance from the IRS on exactly how much of that will apply to the tax credit program. And then HOTMA, there's a new regulation adjustment for HUD that takes effect in January of 2024. And so that has to be very carefully evaluated to figure out. Now it's a huge overhaul top to bottom for the HUD program. But for the tax credit program, there's a portion of it that will affect us, and it's going to take some careful consideration to figure out how that would affect the manual. So you can look forward to that in future revisions, just to let you know. And if you're asked about Inspire or HOTMA, that doesn't even take effect until the end of this year or next year, and it's not something that for right now, for the next many months, that you can rest assured that this manual gives you the guidance that you need to succeed for federal and tax credit purposes, and federal and state purposes for the home and tax credit programs. All right, well, let's call our hosts up again, and let's see if we have any questions. Some of these were repeats from last time that we know we're in the process of getting written guidance on.
And I just wanted to remind folks about the, because I think last time we got a question of, what if I don't have my questions right now ready for this? It's a long manual. So we do have, as I mentioned before, our year-round link, so that at any point while using the manual, you can submit questions, feedback. Certainly if you see typos, let us know. And that link has gone out in our bi-weekly news blast, and we'll continue to just leave that in there so that you have easy access. But it is also on our main web page And it's just a very simple short form. We ask that when possible you provide the chapter number or any supporting documentation or screenshots to the extent that it's helpful. But again, we will take those into consideration year round on a rolling basis.
Very good. Just a couple of quick questions here, Grace, I think we can tackle. Is the ability to take a loan from a 401k considered access? And the answer to that is no. They have to pay that back, and that's not the same as access if you had quit or retire, which is typically true to have full access to the 401k. So that's a very good question. A lot of them every 6 years. So we're going to make sure that we publish those questions and answers, that we answer those questions thoroughly so that owners can benefit from that federal provision.
But I do want to clarify for that one, because I saw one of the most recent questions was about property versus resident, and it is about the property, not the resident, not the you're not tracking the individual residents and their 6th year. It's about the property.
Very good question. Yep, every 6 year of the property's affordability period. And then please clarify the 2-month period for home. The pay periods have to cover at least 2 months, right? So you would look at is it covering 2 months worth of wage history? So it should cover a full 2 months, right? I think that's it. There's some other really great questions, Grace. We'll look very much forward to working on the clarifications, and all of those ultimately someday end up, if it's a clarification that's big enough, needs to be added to the manual in 2024, that will happen as well. But the FAQs will be a nice supplement until we get to that point. So I think we are getting to the point where we're not quite between people and their lunches, but it's getting there. So I think it's 11 o'clock your time. So we want to thank everyone for joining us. Any last words here, Grace?
No, just want to thank everyone again. We really appreciate the feedback we've already started to receive. And again, just be on the lookout. We always post any announcements related to the manual, publishing questions, publishing the video in our newsletter. So that comes out on the 1st and the 15th of every month. So please be on the lookout.
Very good. And I want to thank, this has been a fun process, Grace. The team there has been outstanding. I see several up there on our stage here with us that were part of that process. I want to thank you for your hard work. I think that you got a good manual here. So thank you for your help with that.
Thank you.
Or actually, I should say I helped you. You guys did all the hard work. So all right. Have a good day.